the trade is so vast and so big and so integral to supporting the US Treasury markets, it gets bailed out again. So once again, privatization of profits, socialization of losses. What's the result? Bailed out, more proliferation of money, or complete collapse, whichever one. Gold maintains a high. The bubble is fiat, not gold. I'm going to do silver as well. The best phase is yet to come though. And it doesn't look like much because I've got it on a log scale, but your next interim target is $90, nearly $91. The West is in orchestrated, planned, controlled demolition. I was watching the German nuclear air cooling towers being destroyed and wondering if that is not the peak folly for a great manufacturing nation that has destroyed its cost of energy. So you either seize the challenge or you become in fear, which is the government's biggest product is selling fear, or you get enraged and engaged and moving.
Hello, everybody. Welcome back to Reinvent Money, a podcast about money and markets with only the best guests out there. My name is Paul Buitink, and today, back by huge demand, is my South African friend Francis Hunt, aka the Market Sniper. Before we dive in, please don't forget to like the video and subscribe to my channel. I'd love to get to 100,000 subs over the next few months, so help me out here. Hi, Francis.
Oh, hi. How are you doing? Interesting hearing you mention 100,000 subs. We're, I think, at about 96, 97 as well. So I think definitely they should be helping you over the line, and then they should come over to us as well.
Definitely. Yeah, I'm only at 71, so I still have a long way to go, but try to be ambitious here. Well, third time in 2 months that you're on the show. A lot of people love your content, love what you do, and they also look forward to your analysis. We saw, of course, gold and silver nosedive 1.5 week ago. We went from 4,300 something for gold to around $4,000 per troy ounce right now. So people are yearning for some clarity, some explanation, some perspective as to where we're going. Have we reached the bottom? So look forward to discussing that with you and some other things, of course, because I'd like to get your view on China, US, the deal they apparently closed, and whether this is something that's going to be bigger next year, where we see some trade tensions ease, and also rate cuts, some other things I want to discuss. But let's focus on gold and silver, and perhaps you can pull up some charts to explain to us what's going on and whether we've seen the bottom for now.
Sure. So first of all, the last thing I ever want to sound like is an agent of state or government, but I would definitely say in terms of the gold silver markets, keep calm and carry on is very much the summary of my message, that popular meme. And let's get into, I suppose, the visual straight away and get the charts up for you. Well, in fact, before I start, I'm going to actually show you, we owe it probably to mention that there was a rate cut yesterday. So the most recent news is, the Fed did a rate cut. And then actually it was not so as unanimous as everybody thought. And they talked down the market's almost been baking in a December cut as well. And they said, look, nothing is preordained yet. We've got to remember the absurdity of the fact that they are actually doing cuts in a moment where their inflation rate is higher than their target inflation rate. So this is a second cut in an environment where their number says, I think last time I heard 2.6, 2.7-ish, their rounds just sub threes, and their target is 2. And one of the key things that Powell said in his presser statement, which we jumped on because we feel it validates our economic framing before we do the charts, is what environment are we in? And he said, well, we're torn between, we need firmer rates to bring inflation into our targeting range. And in lieu of the job market, we probably need softer rates in lieu of the employment environment. So they are actually describing exactly our one-word wonder description for the economic environment. We try to break things down very simply and say hyper-stagflation. stagflation. So it is an extreme version of stagflation. So those of you that remember or familiar with the 70s, that is a bit of an association. It's not exactly the same by many, many means. But what that actually means is that for the man in the street, the economy is actually soft and weak. Broadly, recessional vibes. There aren't huge salary settlements. There isn't a problem finding people for jobs. There are quite a few layoffs, if we're talking about US specifically as well here, et cetera, et cetera. That's a stagnatory environment. Yet in the same time frame, we have had such a debasement of the fiat debt complex that the cost of living is creeping up higher than they would want it to be, which is the inflationary side. So you have stagnation, the economic growth half, and then you have how's it for the cost of living. Cost of living getting ever more expensive and actual disposable income reducing, even for those that are remaining in work. So you are facing the dual forces. And people think that you can't have inflation and economic weakness simultaneously. They think it's a binary thing, like a light switch that you turn on and off. And you can. There can be, you tend to feel the net of much bigger forces that are countervailing each other often. And then you just go, well, net, we are recessional, that's disinflationary, or net, we are, we're not having problem getting employed and it's inflationary. Actually, these two forces can coexist. And when they get both very, very strong, there is a no-win situation where you are putting up with a disproportionately high inflation and you're putting up with a weaker than you would normally want to put up with economic strength and growth. So that's kind of where we are. And it's a hyper version because the fiat debasement is in, if we talk about the Hemingway bankruptcy curve, as I like to name it, slowly at first and suddenly very fast. We've said you're at that convexity point where it's become suddenly very fast, which brings me to your original question, which was actually about gold and why did we have a pullback? Because we were in a suddenly very, very fast stage of accumulation in gold. And again, before I distract you with the beautiful charts, which I love to do, I want to say a few more things where it's just vocal. Just as the gold chart I have starts at around 1883. And the first $1,000 took from 1883 to 2008. So my maths isn't that great, but 17 and 8 is around 25-ish. So you're talking about 125 years to 2008. 125 years to get that first 1,000. Then the next 1,000, which was 2008 to 2020. By the way, you only made $19.27 on gold in 2011. So it's 2008 until 2020, even though you came reasonably close. That now is an easier math to do, about 12 years. So you went from 125 to 12 years for the next 1,000. And then we had tested and traded 2,000. But we then pulled back and went right the way down to 16 from 2020 till 3,000 was 2025. That was earlier this very year that we made the 3,000, round about April on the Trump's tariff tantrum. I'll be coming back to that in a minute. It was slightly before then, actually. We had a surge to 3.5, and I'll be referring to that in a minute when we do go to the chart. So you've got 125, you've got 12, then you've got 5, and that 5 is quite an unlucky long 5 because you were pretty close to, you had we kept tapping up. It was mainly a long continuation pattern from the 2020 that we had to break out of. But anyway, let's not make any excuses. 5, and then from 3 to when you first traded 4 was essentially 6 months. So you're asking, hey, how come is this pulled back? To summarize your question and to give some context to it and why I say keep calm and carry on. You're saying, hey, how come it's pulled back, at its worst case, about 11%, maybe is about 8% now, which is actually quite small beer. And how come it's done that? And I'm saying to you, you've just knocked off in the same year 3,000 and 4,000.
Yeah, just to put things into perspective. Yeah, like my friends over at in Gold Trust say, in a secular bull market, there will always be setbacks as part of the journey. And we've in previous bull markets, we had much bigger drawdowns, like 20, 30, even 50%. So between 8 and 11 is of course peanuts.
It is peanuts. It is absolute peanuts. In fact, I'm going to bring up the charts now, but I already had it on something else I was finishing looking at last night. And I'm going to leave it there because it's quite interesting statement in lieu of what we were discussing regarding the interest rates. This is the US 10-year, by the way, that we're looking at. Let me make it a tiny bit bigger on the chart so it can show nice and big. And this was part and parcel of our 2020 call that technically you had had a final capitulation in rates of lows on the events of CV19. So that's this over here. Let's make sure we've got our draw tool engaged there, that moment over here. And just to remind people that are new to bond markets, which this is the US 10-year debt instrument, if I go up to monthly, you can see how long a trend this was. This was 40 years of lowering rates. 40 years of lowering rates, this is log scale. And that was a huge capitulation in rates, which was a massive surge in bond strength. During the huge fear that was generated by the events of 2019. So when I take you back into this chart, that is a trend change for us, and you should be looking for higher rates, not lower rates on the big time frames. So whilst we have had a bit of chop and churn recently, we've come very close to severe technical levels. It's our overarching expectation that in due course, you will break out to the upside here on the US 10-year, which is where the housing market is priced for available debt. And everybody debt finances in the States, as you know, on just about everything. 5.97 is our target. You're currently at just above 4s. And what was really interesting is despite all this chat about rate cuts and everybody becoming, the economy is so weak, they first were transitory inflation. We were saying it's not transitory, it's much worse than you think. When they hit recession a number of years ago, this was still Biden-Yellen era. We said it is a recession because that's the definition of one. And they said, no, the labor market's still so strong. They added a new criteria only for that labor market metrics to be totally revised countless times, monthly, annually, and eventually now during the Trump epoch, they've literally stripped out millions of jobs that were falsely stated. So you've been bouncing in and out of a recession, I think, for a while now. And GDP is a flawed number. But at the same time, you've got such fiat debasement, which is why the gold was moving so quickly, that you've also had this inflation. So the interesting part is this has bounced at the 4 and started a little bit of a turn up. And that's in spite of the fact now that they are talking and there is still expectation for a December cut.
Francis, sorry to intervene there, but why wouldn't the Fed be able to reignite QE and suppress those yields and bring them back to lower levels?
So good question. And let's talk about what happens when QE actually occurs. Quantitative easing is that they borrow more money into existence. And it's very important that increases the supply of money, which, of course, people think brings a feel-good factor, which would be anti-recessional. But it depends what happens with that money. Do they just give it to the banks and bail them out? That has no bearing really on man in the street feeling any better. In fact, it's worse in the long term. They've just been diluted even more. That's kind of like the subprime lows. They kept doing QE and it never lifted the economy because they were fixing the institutions, not the man in the street. And it's only in CV19 where they actually gave a whole bunch of funds to the man in the street that they actually got a faster recovery. So when people say quantitative easing, it's, well, in what manner, and who's the recipient of those funds? But in the long run, quantitative easing is a proliferation of more dollars, which just further accelerates the stagnation of the buying power of those dollars and further accelerates you into an ever steepening decline where a dollar eventually becomes the equivalent of a cent. And cents are almost like satoshis. They're meaning very, very low fractal amounts. And that's the concern you have. It'll accelerate the eventual inflation and it will increase the debasement. Now, they actually want to debase debt because the one bubble we need to understand in all of this is that the biggest bubble is, in fact, fiat debt. And I want to it's something I've started saying a lot more, is that people need to understand that fiat and debt are one of the same. Debt is just postponed in the future fiat to be owed or paid, which has a little rental payment on it, which we call interest. So it's all about the borrowed into the existence money. Now, we've created the sense that they are separated, and I call them the Siamese twins conjoined at the head. Because you can't debase one without debasing the other. You can't drown one without drowning the other, if you'll forgive the metaphor, because they are synonymous. One is money today and one is money in the future for which you're paying a rental state payment, a maintenance fee, if you like. So all of this leads to higher gold. All of this, significantly higher gold. The other things to highlight that are fundamental while we jump on the charts here is with the gold is that you will not have made a top in gold for me with the gold silver ratio in the 80s. That just hasn't happened, especially with the shortages in silver and platinum, very thin markets and very concerning supply constraints on silver. We're just at stage one where we've started to go fast and we've had a bit of a pushback. I just did a few let me just bring in these corrections that you've had so far on the weekly chart. It's a little congested here. That's 10.26 that you pulled back so far. You had a 10.8 over here. These are all pullbacks. I should maybe do it on the 3-day. It's a bit tightly packed. You can see we were 2,536, the low for the last 12 months, and we had a 9% correction there. You've had 4%, 4%, 6%, 10%, 6%. You're going to keep having these kind of corrections all the way to 10,000 and beyond. Yeah. So it really is keep calm and carry on in terms of all of this. For the technicals, that's like what happened in the charts. Well, you have to drop to smaller time frames to see a little bit of this. And in our community, we were discussing that. And you could see that there was a double top here. We got quite a violent slam on this time frame. It's only on this time frame. It's not macro significant. And you've got to rally back up to the same level. That's a double top. It's like an M figure like that. That generates a target. That target was made on that wick. And then with inverted HVF, we saw that there would be a further dip down. So we were saying, don't buy in yet, friends, because we only trade to the long side, even though we saw the short setups in here. I'll show you this as well. And I might just drop it to a 2-hourly. That is the last bit of price behavior. We said, yes, look, another squeeze is set up. That's an inverted HVF. It's a continuation pattern further downside. That means you have another target to make, which, of course, you have made to the downside. And what's actually happened now is you've started to get some rallies. They're on holding on that. There's still some firm selling. But eventually, if they continue like this, one of two things will happen. We haven't called the bottom yet, but the momentum sell-off was highest over here. We haven't had this level of momentum sell-off since. This is more a gradient down. And the minute it started to capitulate, the buyers came in. You see a little bit of an acceleration there. Boom, you made the target, and then buyers came in. So there's a lot of money that's quite prepared. This was, again, the momentum was still a little firm to the downside and a bit grindy to the upside. So what could happen here, for those wondering what happens next, is that you could get another flag rally and another reasonably firm sell-off here. And you'll end up setting up potentially another one of these, which is like that. 1, 2, 3, which we call the HVF setup. And that is a squeeze. It's 3. It's a tightening of the volatility, something quite flat bottom like that, down, and a small bounce with a flag. And you'd probably, if this is the bear scenario, it's not only a bear scenario. I'm not calling this as my base case, but if it does that, technical traders that are short term who like to trade in any direction could short here. Or if you're a hedger and you already hold and you'd like to hedge a little bit more downside, you could sell short with us, technically trading this against your holdings. Take your target on the downside, use any profits to buy more bullion, which will at some point be going up. The point I'll make here is these patterns are also getting smaller. I'm on a 2-hour time frame now, having shown you the exponential move, the rate at which new thousands were being accumulated. This actually is just a technical correction. I would say there is a third sell-off maybe in there. So I think there's a reasonable possibility this occurs because we've had typically you get waves of selling that are in threes. So again, I'll change color. We're talking to our Dutch friends, so let's go with the orange.
That's very friendly.
Yes, indeed. Let's get nationally proactive here. This is one big wave of selling that you had here from the double top high. You had a continuation pattern. You got a second wave of selling. This could be pattern number 3, and you could get your third. And I would be starting to think it wouldn't be as fast as that. It may not even be as fast as that, and it could start to be the final leg of dissipated weak hands. Look, a lot of people jumped in when it looked like a one-way bet with excessive leverage, and you clear that out. Those aren't I would say the long-term stackers who've been stacking silver and gold for 20, 15, 10 years. They won't, so you're not being affected by that. So one more sell could be a possibility. How do we be wrong on, say, that bearish scenario and it turn into something more bullish sooner? So you could look at this, you could go, this was quite strong down, but then maybe we get quite a strong surge up to a potential neckline here. This is what we call a funnel, by the way. So it creates a keys levels of significance, in this case, a zone, a sort of like hard rock. You know, when you see the mountains and there's an igneous bit of rock that has lasted a lot longer than the sedimentary rock all around it. If you're a geologist, you'll appreciate that kind of thing. It's a harder zone to find. So you set up a reversal pattern. You come up quite strong up to here. You get a small rejection. You can see we had a small return move there. And then you end up with a W bottom. And then it breaks violently. Typically, you clear points of resistance with real momentum, and then you rest afterwards as support. So that would be a W bottom. That's a technical possibility. And I would just watch, is this coming down with some momentum to the targetary level? You can see how that was a key level there and there again. So our targets generated by the inverted HVF remain key levels, both the targets and the funnel. And we'll watch, are you reversing? The first reversal pattern, if it starts to show momentum going into this zone, means you're probably getting ready to get back above key level of significance, round number 4,000. Don't forget that that's running through here. I normally have it drawn on, but it's around. Yeah. There it is, the blue line. There it is.
And what does your gut feel say, Francis? The bearish scenario or the second scenario?
Here's the thing about being a good technician. Don't commit too soon, because the minute you commit, you've married, and then you don't see anyone else but your wife. There's 2 beautiful women there. Let them show themselves and reveal themselves to you, and choose the one with the best character, the best all-round characteristics. If you just run into the room and grab the blonde, or the smoldering brunette, you tend to repent at leisure. Take your time and let the market tell you. And the momentum of the next move actually could be quite critical. Because if it's a short little pullback and then quite surgy through here, I'd be prepared to call a W bottom here, which generates a target like that, which comes from that amplitude to that neckline there. And then you're getting back up to, you probably tap out at the 4,200, which is very interesting geometry, because that's your neckline from your double top, if you recall. So that's the beautiful thing about charts. They just keep bringing up the key levels of significance. So you could tactically trade that long if you got some momentum here with a very tight stop there, for example, and trade that if you're a trader. But for most of your viewers, it's, are we turning and is the pain over? They should not be watching. If you're an investor, you really shouldn't be watching your device for the everyday.
I mean, I just see that we broke through 4,000 just now. We're recording this at the 30th of October in the afternoon European time. But that's I guess, a resistance level that we just broke through again then.
Yes, but it's shown itself here. You see a little bit. It's been revealing itself. I call that iceberging, just a small, when a shark sticks his nose over the water and eyeballs above the level, it's kind of like that. And a little bit of softness here and a little bit, it's low volatility. It'd be interesting to see how it reacts now to the fall. Does it get rejected with momentum? That would be the inverted HVF potential structure. Or does it hang around and actually have a move higher? And then rest. So there's a couple. I ran the scenarios on the low time frame for you. I'm going to do silver as well. Of course, silver is very reliant on gold. It's the king. When the king stands up from the table, everybody else is come free to move. But it was slightly different in its reversal in that it had a head and shoulder, not a double top. And we saw this. So the minute you get your first slap in the face, and then you go marginally higher, and then you get a bigger slap in the face, what you get is broadening structure. That was broadening structure. That's a megaphone, and that's an ascending broadening structure. You can see why I call it ascending, because we have what's called a splitter. This is unique to HVF method theory. You won't find it anywhere else. That's why we're powerful technicians. And when you have a bull pole with an ascending megaphone, it's tapping out. If it's descending, it's continuation. And then once you get a little bit more information, you see, well, we kind of had a flag there, and we'd already had a sell off there. The round number that is quite clearly a neckline for us is $50.65. And then you can identify subsequently. So patterns further confirm each other rather than contradict each other when you're doing it correctly. So you could have shorted the flag. Again, I don't short silver in bull markets at all. It's not my game. But technically, you could have shorted there with a very tight stop there. You would have been triggered into the head and shoulder there. You would have had the head and shoulder target right the way down there, which you eventually made as well. And you would have taken out the 50 round number. We've also put that in, which is quite an interesting level. And gold at its 4,000, you kind of got silver, not quite 50, but it's 49s, going for 49s and back into that 50 range. When we met you, we did warn. And I want to just say the following as well, for anybody who's feeling a bit intimidated by the recent price action. You're watching it on too low a time frame. We said, when you get to the 50 level, which had been resisted, and we used our standard catchphrase that you'll remember if you watch the previous video. I'm sort of leaning, I wasn't a Lionel Richie fan, but he got played so often. It's once, twice, three times, and then a lady. And it came from there. And
it's
such
a nice cup and handles. It
is. It's an even better HVF. We'll show you that because it gets you in earlier and gives you better targets. There's your once rejection, 1980. There's your 2011 rejection. And we said you'll get rejected at the $50 range again, which has happened. That's kind of a shooting star. Let me just put the eye on, make that all go all quiet. 1 sec. Let's move that guy. It's putting something in the way there. Let's make it go away. You can see I have a small shooting star there. We'll leave the lovely Dutch orange behind for a second, and we'll go back to our transgender pink. And there you go. Small shooting star, which is a rejection. So, you could tap out, have a little hammer, and that could be it. Or it could dip a little longer. But again, this is an incredibly bullish structure. So it's the fourth time that you get your huge move for silver runners. You needed to make the third visit to the $50 range and get rejected. Watch the previous video when we were with you. We would have highlighted this when we covered silver. Now, why we say this is an ascending HVF, not a cup and handle, or it is both, but why the one is far more powerful than the other. We, with our drawing tool, generate real live targets. And you've seen how our targets work on the smaller time frame. They're more reliable on bigger time frames, and they've already shown themselves to be exceedingly reliable on what we've just shown you now. So that is an upside on a log scale chart. And this is one of the biggest structures. It is actually the biggest structure I'll ever trade in my entire trading career. And I've been in the trading space for a very, very long time. And the bigger the time frame, the more the reliability. But what people forget is when you're on a quarterly chart like this, you really need to set and forget and relax. Most people's time frame, they're wired too quick. They jump in, they jump out and all of it. You're best served by just being net long. Now, that's an investor in many instances, but you can actually leverage trade this. So for us, you triggered this pattern quite some time ago. It was July in 24, I think it was, or 23, when you ran that 23. And you've made our first target, and we normally get a little bit of a pullback after you've run there. That's what's potentially going. The best phase is yet to come, though. And it doesn't look like much because I've got it on a log scale. But your next interim target is $90, nearly $91. And again, I'm going to just take it off log scale for a while so that people realize what kind of a call that is we're making. We're not shy. You're not getting easy calls. You're getting massive calls. You're getting massive calls. When this is done, possibly pulling back. Hey, it could come all the way back and rest on the first target. It's often a key level. Or it's nearly done now and might just have a short pullback and a little final dip down. It could technically even come back to our green line. It's not always does that, but we call that a return move. With the shortages and fundamentals, I think that's going to be hard. But maybe if we have a huge financial crisis, a demand-destroying event, and banks have been aced, and there's nobody building anything. Solar panels aren't made, no one's buying. We really stopped the clock on the economy, kind of like what we'd tried before in March 2020. Then you could quite well have a pullback all the way to 30. It's not a call that I'm making, but the next move is this move. Whatever it does to the downside, let's say it does that, it's running to the doorstep of 3 digits as part of its next major move. But remember, each candle is 3 months. It doesn't mean tomorrow it's doing that or next week necessarily. This could take 3, 4, 5, 6 weeks. It could take till the end of the year to happen on a pullback. It might not. It might be 3 days. I can't answer that. How long is that piece of string? I can't tell you. But if you're staying in for the long run, the next time you have a major significant pause will be in this level. You may have technically just run 100 and done 101, 103 and been smacked down, a little bit of Mr. Slammy action, or you would have balked at the 100 and you'll be sitting in the mid-90s winding up for that key psychological level to go higher. But I can tell you, this is, we're at 80, this still is the buy, the cheap buy.
Yeah,
and
nice.
I've said before, that's 100 ounces buy. Yeah, hold that up. Let everybody enjoy a bit of real money there. Beautiful stuff. Milited, and there's babies as well. This one, it doesn't lay babies for you, unfortunately. You have to buy them, but that's a 10 ouncer. We've just recently visited our vault, and I just take a sample of what we have there, and I'll return them. But just to remind everybody, it's beautiful. It feels beautiful in your hand.
Absolutely.
That's real money.
Yeah. And last week I talked to Alistair McLeod, and he feels like the shakeout that we saw 1.5 weeks ago was coordinated. What's your take on that?
I think we have a tendency, even when there's a technical extremity and a lot of leverage running into something, to always say, I think they have been controlling the silver and gold market generally. And on that view, I agree with Alistair. I think he's a very sound individual, by the way, and he's not prone to emotional. So he's not the kind of person I would attack at all. As a decent man. But sometimes potentially it's just a technical turn. We said it. So let me give you the whole precious metals. Here's the clues that we gave you last time we were here. Once, twice, 3 times a lady, you need a third rejection in silver before you rip into those insane new number highs. Now, technically, we did get a new high. It was 53, but we've traded close to 50 in 80 and in 2011. I'm talking about a whole new digit, not 6s, 7s, 8s, and 9s. The real gift is still to come. That's surgimentals. That's where everyone who's bought when it was $15, $20 is really starting to make proper money. Not like they made 80%, 2x. You've been accumulating. Your average cost is $27 or something like that. Hold on. When you you leave the 50s, that move is still to come. We told you that before this happened. So that was predicting a degree of rejection. Then on platinum, we said you were in a weekly structure and you have a key target there. And that is, why is the target a key point? Because it's when something is likely to rest. Again, I'll put this one on the monthly. This is platinum so that you can see this. But this was a very key structural. This is the power of HVF method. If you trust it, it will tell you, listen, you're going to have some form of a pause here. That's why it's a good target to get in. There is the target on platinum. Let me just rescale this. So once you've run that, you get a little bit of a rest. All the metals are correlated. So platinum's going to get a rest. After this target run, you should have stopped going so aggressive on the leverage longs. We gave you the leverage longs on gold at 3,350. The April hold up all the way to September was a continuation pattern, and we were jumping in long, and we had community members taking 6 and 7 digit numbers out of that, turning it into turbocharged stack that they've all gone and bought near the highs. They've sat through the drawdown, and they now have significantly more gold ounces and silver ounces. And can I say, you should not be valuing your debt as a unit of account in debasing fiat, which is in the accelerating Hemingway bankruptcy curve. Your dollar or euro value is absolutely meaningless. It's going to cost you way more euros to do simple things than it used to cost you. Your wealth should be measured in gold ounces. That's why I'm laughing at all the people calling. I'm not laughing, but I'm saying they were incorrect. People talking about blow-offs in the NASDAQ and the SPY. Go and divide it by gold ounces. It's been the unit of account is flawed, and is now the monkey on the grease pole has given up climbing and is sliding fast down the grease pole into the crocodile pit, as I like to say, and is about to be consumed. You don't measure your wealth in a unit of account that has zero stability and is debasing. And then you'll say, but it only lost 10% or 12% to the euro. They're all debasing, and you're measuring, aging monkeys on grease poles against each other. Why don't you look at something that's maintaining its height and is not slipping down a pole? And that is gold. Gold maintains a height. The bubble is fiat, not gold. I've got to get this through to people. Gold is the plane that's maintaining altitude. Everyone else has jumped out the plane and saying, I'm doing relatively better than the guy falling behind me. People really, really need to get that. And the value of HVF method in our community is, we said, okay, you're running these 50s. We're still expecting the possibility of a pullback. Once, twice, 3 times a lady. That's how it works technically. Platinum's just run its target. We should be backing off and going smaller and closing and being happy with our trading profits now and waiting for that. It's exactly what's happened. Gold rested. Yeah. Platinum has rested. It's happened.
Interesting. Yeah, good stuff. And I saw the latest quarterly figures from the World Gold Council, the Q3 figures, and a lot of interesting things there. Of course, there was a record ETF buying, very strong coins and bars buying as well. And in China, apparently, one of the main reasons why people in China buy gold is because of the trade tensions with the US. Now that Xi Jinping and Donald Trump met each other and is trying to smoothen things out, or at least so it seems. Do you think that's going to have an impact on China buying gold? Both the retail people there as well as the central bank?
They're destined to resent and to be in conflict with each other. It doesn't matter how many times you pull them together and meet up. It's like me and you both have our eyes on the same girl. It's going to be hard for us to be continually friends. The hegemon, which is the US, is in decline. They know it. The real people that know it. I've recently dealt with the Cayman Islands as this bottomless bid as a proxy for treasury demand. And I always find it amusing when you get another strong auction, foreign buying on US debt, the demand is still there, all those people calling the end to the dollar hegemony, these kind of tweets that go out, et cetera, et cetera. And then you find out there's a massive basis trade taking place by hedge funds, and they are purchasing, with only 1% of their own money, obscene amounts of treasuries. And then they are shorting the futures for a basis trade that makes a marginal return that they're applying such leverage to try actually qualify for a real return. And then they're borrowing in the repo markets to get the money on a 24-hour basis that they have to keep renewing the loan for the entire period while the futures are coming down to delivery date. And they are being charged a finance fee for that. That the minute rates get too high, the entire profitability of the trade will be compromised. It's leaning on the plumbing between banks, the interbank lending, the money markets. Don't forget Warren Buffett's put about 340 billion on interest where he's earning just over 4% because he doesn't like the valuations in the stock market. On that point, he's right. But they are actually utilizing money like that and rolling loans to put one of the biggest Ponzi lending, and Goldman Sachs, JP Morgan, all the primary dealers that are the issuers of bonds are facilitating that. And then when you look at my very economic and efficient hairstyle, you hear about the phrase a negative haircut. What does a negative haircut mean? Negative haircut means you take your $1 and you borrow up to $100, let's say. You then take your $100 and you pledge it as collateral. You don't even own it, you own 1% of it, and they give you a negative haircut, which actually means they will lend to you more than the collateral you've provided. So I go, okay, lend me 125 against my 100, because it's pristine collateral. They use this unique language when they talk about government debt, and I'm saying I just recall it pink Crocs, as always, because it's kind of uncool, not fashionable, rubber shoes. And I point to you looking out over the ocean, and there's oil tanker line going all the way back to China, and the holes are filled with pink Crocs. And you've put it in every room and every cupboard. That is not pristine collateral. Things with absolute extremeness of issuance, for which there's no scarcity at all, you're at the other side of the continuum, must lose value. You don't charge for oxygen molecules. They're all over the place. We're using them all the time. These things are almost as more proliferated. And the Cayman Islands article that we mentioned, and I don't want to go too far into it and get too technical, but they own 1.8 trillion of hedge funds. Now, I want to describe a trillion. Counting one every second, 12 and a half days to count to 1 million. 12 and a half days of doing nothing else but count and making sure I smash out a number every second. I'll eventually, going to 1 billion would take me 32 years. And I could probably only read out the last 2 digits, and someone will have to keep a column count. 32 years, no sleep, no on the bathroom, no matter where you are, you're saying a number. 1 trillion, 32,000 years. So Cayman Islands GDP is 7.13 at 2023 numbers, 7.1 billion. That's the same as you. Let's say you earn 250,000 euros living in Amsterdam, in Holland, and you have a mortgage, a wife, a car, and all these other things. That's your gross number, your GDP. And GDP is actually a bit artificial. It inflates. A gross salary is almost better than a GDP number. If you had 250,000, what's the odds of you having a 68 million euro bond portfolio that goes with that? That's the same proportionality of the Cayman Islands income.
Only Nancy Pelosi can do that, right?
Only Nancy. And I can say that they haven't paid for it. They haven't paid for it. They've got a day-to-day borrowing, not a 30-year mortgage, not a 10, a 1 year, a 12-month, a 3-month loan. No. They're refinancing it each day on an automatic housekeeping basis that is churning and turning over money. And it's entirely reliant on the futures markets being higher when you are further out than owning the treasury at underlying level. So the price is higher and they short the futures and they go long the actual asset. And then what it actually means is if you ever get backwardization in the futures market, which we've just recently had in silver, by the way, where the futures prices go up and the cash market turns down, these guys are so levered, small moves will just blow them up. And what this means is the trade is so vast and so big and so integral to supporting the US Treasury markets, it gets bailed out again. So once again, privatization of profits, socialization of losses. What's the result? Bailed out, more proliferation of money, or complete collapse, whichever one. So, you choose. It's almost like choosing between surrender and suicide.
Yeah. So in this inevitable decline of the American hegemony, they will clash with China because it's not going to be
to answer your question. It's inevitable.
A peaceful transfer of power.
They are self-reliant on each other in terms of their trade, but it's a huge trade surplus in the benefit of China, and that huge trade surplus means actually. The America is throwing IOUs in the form of treasuries and debt paper at China, and China is sending goods to America. And what that actually means is, as people are now circumspect and building an alternative system, they're not interested in keeping those IOUs. They're converting it into gold, and the gold is flowing from the west to the east at a rapid rate. All new mining and existing bullion is being rehoused, and they're setting up a parallel system after the weaponization of the SWIFT system under Biden against Russia. And this is the end game. They don't have to do anything. The Chinese have a saying, actually, just lie on the river banks, on the side of the river banks, and all your dead enemies will wash by. And what it says is, don't go out to kill people who are killing themselves. In due course, you can just enjoy watching their corpse float down the river. Now, I didn't encapsulate that. That's not a verbatim translation, but in essence, they don't need to do anything. They are watching a bully slowly die.
Yeah, don't disturb your opponent destroying itself. Huh?
Yeah. Don't get in your enemy's way when he's doing self-harm. And in essence, that is where we are at with the politics of everything.
Right. Well, thanks so much again. It's always interesting to listen to you, Francis. And just for the audience, remind them where can they find more about your work and the HVF method and your community?
We've got Dutch, German, UK people coming from Europe that are becoming more fluid in terms of how and where they are living. Even with children, we have people that have moved. I'm speaking to you from Panama. The West is in orchestrated, planned, controlled demolition. I was watching the German nuclear air cooling towers being destroyed and wondering if that is not the peak folly for a great manufacturing nation that has destroyed its cost of energy, and Porsche profitability fell incredibly low, all because of political malfeasance, utter stupidity, and economic moronic economic principles. And it's quite clear that it's not stupidity; it is by intent. And the problem you have is it becomes very hard to make money and to have a good quality of life when everyone around you is in a downturn. I've often bragged I could beat Kelly Slater in a surfing match if I was in Cape Town with an ordinary board and I gave him an ironing board and put him on the Mediterranean Sea with no waves. It's not about talent, it's about environment. And you could be the most talented Dutch, English entrepreneur, business person, or employee who's entrepreneurially working away. If you are in an environment of social decay, decline, and that is what comes out of this, we're rolling into totalitarian Marxism here, you will find yourself having a far worse quality of life and having reduced freedoms. The irony is the people pursuing sound money and attempting to establish trust and faith are not the Western nations. It's not North America, the Commonwealth, Europe, and the United Kingdom. And I'm actually pitching you that you need to think about moving. That doesn't mean immediately. It means you establish places you can live while still maintaining your home and making plans and conditioning your family outside of the Western hegemony, for which the US is on the highest ladder and falls hardest. So our community at themarketsniper.com, the website, or the YouTube, The Market Sniper, or on X, The Market Sniper, is here to help you build further wealth. The great thing about this rather bad economic environment and trajectory is that huge opportunities in collapse are generated. And this is going to be a polarizing event. You're going to be destroyed by them, or you're going to be enriched by them. And that depends on your positioning. Have you got an ironing board or a surfboard? Are you ready to ride the wave of destruction, or are you ready to get dumped by it? And our whole goal is we will help you build wealth. We will help you protect that wealth. And that goes beyond, trading and investing. That means jurisdictional aspects, and secure you freedoms and a higher quality of life in reset times. The traditional financial advice systems that were built for the previous era are like going to war with an assegai and a Zulu shield in automatic gunfire times. You have to prepare according to the epoch and the times. Our community is hell-bent on that. It's a great opportunity. We've chosen to be born during this period. Don't be bummed out by it. Be excited about it. It's an opportunity and it's an adventure. The minute you start taking action, you are fighting the mental psyop that you are facing. We take action, and we see this as defining for our lives and a great opportunity, although challenging. So you either seize the challenge or you become in fear, which is government's biggest product is selling fear, or you get enraged and engaged and moving. And if you're in the latter camp, come on over to our YouTube channel and start preparing along with all our other community members, and realize how many people like you from towns nearby you are already doing exactly that. Yeah. Thanks for having me on.
Good stuff, Francis. And it's always nice to end with some motivational words. And what you just said resonates with me and definitely also with many of my viewers. So viewers, please check out The Market Sniper, subscribe to Francis' channel, help him to reach the 100,000 subscribers. And let's do it again soon, Francis. Take care.
Look forward to it. Thanks for having me on. Thanks. Bye-bye for now.
Bye.